What's up? What's up, guys? AMC up 5% after hours. Boom, boom, candles. Look at those candles. Oh, man. All right, what's up, guys? Isn't this call in an hour? It is in an hour. It's in 55 minutes. But you guys know how we do this. We chill. We chill it out in here for 55 minutes before the lobby music comes in. It's crazy, man. This barcoding, like hardcore barcoding, and then we have this like massive volume coming in here. So definitely looking for some kind of move here. I'll talk about my projections here because I think really based on the like earnings were released this morning, but I think a lot of people are anticipating some kind of closure or something to do with the reverse split conversion, something Adam Aaron might just pop out and say, and that can definitely affect the price. So that's what we're going to be looking for here is some like clarification, man. Like we need some. We need that transparency, man. We need to, you know, like there's just so much unknown right now, and I think that, you know, owe it to the people, man. Owe it to the retail traders. Yeah, it's all about that lobby music, man. Oh yeah, I'll play some jams. Let's get some jams going. All right, let's see. I am gonna live stream it, man. I'll be here for it. We're gonna take a look at the charts. We're gonna take a look at the price action. I'm gonna pull up the projection I had and the updated version of that projection, and then we'll go from there. So, earnings call is in about 50 minutes. Okay, here is the projection I pulled up a couple of weeks ago. And one of the things I was going over on the Discord was the structure of this. So not so much the levels that we're tracking, because we're not tracking the same levels, but we are tracking the same structure. Okay, so if you guys can see right here why I think we're in November. Okay, taking out the projection real quick, we obviously have this dump, but now we're developing this like short-term parabolic arc is what it seems, right? Like the price wants to come up. And on the projection, we have that. We have this cup. You have this little mid phase here in the cup. So a little spike, volatility gets shut down, and then the parabolic arc starts to ride before it reaches that $8 range again. So that still holds. The structure is still holding, meaning that we should expect to see at least some upside here in the short term. I'm not sure if we're going to get to that $8 range in the short term, but remember, this is a massive FUD phase is what we call it. This is a shakeout, okay? Before GME ran up, it did the same thing. Back in August of 2020, GME had bottomed, officially bottomed, and then it rode its way up. It did something like this before it just, you know, got all these shorts, over leveraged, cannot bring the price down. These are attempts, guys. These are attempts after attempts to try and get the price coming back down. But this is what we've been saying for so long now, is that at some point, I mean, yeah, these guys have been suppressing the price action for 2 years now. But at some point, the stock has to turn around, especially if there's nothing wrong with the fundamentals. Okay, fundamentals go last. I don't believe that fundamentals play a big role in the market. Prime example of this right now is Nvidia. Okay, Nvidia is like, you throw away the fundamentals, like it doesn't matter. Same thing with AMC. I mean, it's worse in that case, that fundamentals don't matter. But in the end, you still have to look at them as a way to sort of confirm this macro thesis we have on the squeeze, right? Which is, if the price is going to turn around, and we're starting to see things finally turn around, it's not going to happen right away like that, man. You have to ride the wave up, build that pressure, and then naturally that will make things go up and pop. All right, so then that brings us back to this earnings call. What I think is going to happen, I think Adam Aron's going to go over the judge ruling, and I think he's going to talk about that. He's going to go over his tweet. He's going to go over a lot of things, I think, and because the past 3 earning calls, like they've been pretty choppy, right? They've been there hasn't been as much clarity as we want. So I think that on this one specifically, because the price literally 1x'd here, 100% in 10 minutes, right? You guys remember this? So this, man, like, we got to talk about this. We got to talk about this coming back down. We got to talk about the tweet. All that stuff is got to be talked about on this earnings call. Okay, a couple of other things to note. Maybe some positive things here. What sector right now is kind of making a comeback? What sector is making a comeback right now? Remember all the stocks in 2020 that went up prior to AMC? Right, way back here. We had Nikola. Nikola was one. And we also had in February or April of 2021, we had a lot of stocks go up as well, like Tilray, the cannabis stocks, the sector. And right now that's booming, man. Things are coming back up. We're seeing that happen with Nikola, with Tilray. A lot of these overly shorted stocks that are making that comeback. So you got to look at those right now. Tilray is up like 35% for the day. And there is a correlation between the two. Okay. Right after AMC came up here on the 24th, we had Tilray start its run back up. There is correlation with that, guys. These two, look at that. AMC goes up. The day after, okay, we have Tilray gap up. Gap's up right now. It's climbing back up again. Pull these two together. Look at this. Let's go back to March. March 2022. AMC starts climbing back up. Right in the middle here before it makes that 100% move. Tilray gaps up as well. And obviously we got good old June 2021. And then right here, which is what I'm talking about mostly. I'm talking about this. So remember how we are in a macro version also of November of 2020 because the projection is based off of that. This little projection we have right here is just a larger version of 2020. So if we take this, take a look at what all these other sectors are doing. Cannabis sector, the EV sector, overly shorted EV sector, Nikola, EVgo, Canoe. Guys, right here. Rides the wave up, and then it starts to squeeze. If AMC is doing the same thing, and look at this, guys. If AMC is doing the same thing, look at what Tilray did. What did it do before it reached those highs? It rode the wave up. This is the same thing. It's a FUD phase. It's a shakeout. It didn't go right away. It took some time. It took what? October? Same with GME. Same sort of thing. About 4 months. You know the craziest part, man, about this whole thing? Tilray, before it did that, look at what happened. Tilray goes from 25 bucks, and I'm sure there's maybe been some splits or something here, but it went from 25 bucks to 300 before being shut down. It rode the wave down for a few years, just like AMC. AMC a few years, and then it starts to climb back up. This is what I'm talking about. These are the correlations you want to track and look at. Look, I'm going to give you guys a prime example of this, okay? The markets go through periods where they rinse and repeat. They rinse and repeat stocks. New stocks come in, they do the same thing, okay? In this case, things are a little bit different because there's a pretty massive movement around AMC stock compared to these other stocks, so it makes it a lot worse for these shorts, in my opinion. But here is a prime example. Moderna, mRNA. Okay, I have a tool. It's a pattern scanner that tracks stocks in the markets. And if you guys have been here on the channel, I pulled this way back in January. I pulled this pattern up. And this pattern had already played out with another stock. So recently we just came up to this spring here. You can see that the price followed through for almost a year, okay? From here all the way down, same level, everything. This is what I'm talking about. It's the rinse and repeat. This happened back, I believe, in 2018 with another stock, and Moderna is currently following this sequence. So same thing with AMC, man. AMC is following a sequence. And it's getting ready, in my opinion, to climb back up and make that move, okay? All right, 5, we're right around that. Look at that, so 5% up, and then it gets shorted down about 7%. So a lot of volatility going on right now with AMC. Let's take a look at APE. APE, yeah, a lot of volatility as well. AMC plus APE. Let's see. So, and I talk about this all the time as well, guys. AMC plus APE is the true price of AMC. However, it's the true price only if the two merge back. Not if they don't merge back. If they don't merge back and AMC just like, you know, holds separately from APE and, you know, they do whatever they want with APE at that point, then things do change a little bit. But if we take a look at AMC right now, we would still be in that triple bottom setup. If you zoom out of the chart, the triple bottom. The crazy thing about just APE though is you can definitely tell the price is ascending. So it's not flat. This is riding a wave up. It looks more like a wedge. So we got that little guy right there, creating a wedge instead of a triple bottom. And some of these things you just won't be able to see on a regular chart. Okay, throwback to AMC's all-time high at 77. This does that for us, this little indicator. Yeah, dude, like Adam Aaron, like, dude is pretty funny though. Like on the earning calls, like he has I think what was it last time? I don't know. Like he's done it a few times though. I think the last two earning calls, he's like either like eating popcorn or like sucking on a candy or something. Like, dude is goofy. My dude. How we doing, man? Brian, Joe, Blake, what's up, dude? Luis. Any predictions, man? I have a projection you can track on, if you go on Trading with Emotion on Trading View, if you go click on the profile, there is a projection you can track there, as well as other things. But I do have a projection right now, and this is my little projection, all right? So you can see right here, this is not and will not be one-to-one, of course, but you can see that right now we are following the same structure. Like the levels might not be the same, but the structure is definitely following. And what's important about this is that we're respecting this support trend line right now, which is sitting at a, let's see, angle. We're looking at about a 25-degree angle on the way up. Now I'm kind of curious to see what GME was at when this thing happened. Oh, look at that. I have the same thing here. Angles are very important, guys. 31. Okay, so this was a little bit steeper. 31, and that was prior to this, though. We had kind of a 8-degree angle from the bottom here, and then we did also have a similar triple bottom kind of setup here. You guys can see that a little bit. So like this. Yeah, I mean, like, this checks out, dude. The timing is a little bit off, I think. We got August here, and it's about 520 days before it goes up. Let's see how long it is here. Yeah, it's a little bit shorter. It's about half the time. From this moment, though, here, it's about 160 days, which would be right around here. But if it was the bottom from here, 160 days would be December time. How's the NVAX looking? NVAX is great, man. I'm tracking a volatility zone later this month for NVAX. NVAX is a massive pump and dump. It's like this thing will pump and dump like you wouldn't believe. Every so. Look at that, guys. This thing is a pump and dump. I like this, man. I love this freaking stock. It's just like, it's pretty consistent with the pump and dumps. Once it reaches this level, it just it loves to turn around. Definitely keeping this one on watch. I do have a volatility zone I'm tracking later this month. All right. Real quick, too, guys. So I've been getting some questions about the cycle. So we talked about two different things, and right now we have about 35 minutes left for the earnings call. So we're just gonna cover some things here on the cycle and stuff. I brought the cycle back, the old cycle here. See, it's like placed and everything. So I talked about two different scenarios here for the next points of interest we're tracking here. But if the cycle did end in January, which is a likely scenario based on the patterns we tracked, the ARPA pattern that started to give up right here, we have a sequence that lasted about 2 years. So if it did give up here, then the cycle right now is shifted about a month ahead. So that means that things wouldn't be tracking in August time. It would be September, and then the next one in October would not be tracking in October. It would be November. So they are shifted about a month on this new cycle. But I'm still tracking this one in case things do show some volatility coming back up, and we are still in this in the same cycle. That'll still be there. A couple of other things that I am tracking right now. I'll pull up the parallel channel. What time is the earnings call? It's at 5 p.m. Eastern time. All right, guys, here we are. It's 2, very important. Well, I gotta draw some like a little curved line or something. This little guy right here. You can, there's like many ways you can look at this, guys, but there are a lot of indicators you can use that would confirm this type of a setup playing out. So we have the parallel channel. You guys know how that works. And then crossing this support trend line here, which is very important. Crossing that initially from being outside this zone here for over 250 days already. So it's already like over what we where we were out here in June, coming back into the channel. But coming back in is when I think we are going to cross all of them. So the volatility, the parallel, and the support zone. Should all be crossed. Basically doing the same thing that we did back in January. But before that happens, because things are a lot bigger, they're a lot larger, you have to take into account, this is why the projection looks like this, because this is it's a massive cup. So once we come into this channel, you kind of take a look at this, right? This is a bigger version of that. So if it's a bigger version, we're going to cross all of the channels. We would essentially come up, cross the volatility zone, which we can see every single time we cross the volatility zone, we get rejected and we come back in. Okay, that's this last guy right here, this big guy. But after we come back into that channel, coming back in here, say that this thing trades sideways, it reaches that $30 level, it comes back down, and it trades along this range here for, you know, a few months like it did back here in January. If it does that, then we would be in this big pennant. Okay, let's see if it still holds the projection here correctly. Nope, it doesn't. Trading view, you gotta fix that. Okay, but here is that pennant I'm talking about. So it would look something like this. And then right here would be the first cross here on the pennant. Now, pennants don't have to come and narrow down all the way, you know. They don't. They can cross. If it crosses here and this keeps going, things would change a little bit. You guys know how projector patterns work. Projectors are what we see happen prior to like large runs. Another way you can look at this is Elliott impulse wave is a really good example of how projectors work. But this is what would basically happen. All right, impulse wave. We got ourselves wave 1 crossing, saying FU to a pennant, and then you guys know that the second one is the largest one, right? So things would just cross, start climbing back up, and then at this point, yeah, we wouldn't have it. We wouldn't have a pennant anymore. We would have like an inverse wedge or something, man. You know what I mean? That would be awesome. All right, guys, we have about 30 minutes left. If you guys have any questions, go ahead and ask, man. We got 30 minutes to just kill time, right? Why do I think they announced earnings this morning? So, like, you know, that'll be hard to speculate why. I mean, I ask myself why a lot of things happen with AMC the way they do. But you do have to think about, like, the algorithm and the way that the market functions sometimes is you got to be skeptical. Like, I stay skeptical. I stay skeptical every day, and And that's not to not to speculate on what is going on behind the doors, but you must stay skeptical because you never know what they are doing, right? But like, I'm not going to try here and break down and speculate what they're doing. Just remain skeptical is all it is. But based on some of those things, I look back at the algorithm and I'm like, dude, because we're able to track certain things and things have happened a certain way here with the algorithm, we know that the news and catalyst comes after the pattern has been displayed, right? A prime example of this is Moderna, mRNA. Everything up until where it got just recently, where it's in that spring setup, there were major catalysts that were coming up in between. So you have to ask yourself why. Like, why does it follow a structured pattern that played out in the past, and why the catalysts are like, they're like lining up to where the price goes up and down. It's the craziest thing. It's almost too good to be true in a way. But that's just how I treat the market. I know it's not, I think it's something that you kind of have to have your hands on it for a little bit to kind of grasp a little bit of how that works. But I've done this for so long that at this point it's just, for me it's something that it works, and I've seen it work before. So I rely on the algorithm and the cycle and this sort of approach to spot down and narrow down these volatility zones. But yeah, man, that's what I think. I think it has to do with that, but I'm not gonna call anybody a bad guy or anything, because that's speculating some stuff. I'm just here to crack down the code or try and crack down the code. That's the goal. Yeah, man, for sure. So a couple things on Ethereum Classic and the correlation between the two. We'll do a little update here before we start. So Ethereum Classic right now is not tracking the same way, or at least we don't have the same correlation we used to before. But that's fine, because when we start to see like a clear correlation, guys, we're gonna need to see like this major volume on both. Like, we're gonna need to see it on AMC. We're gonna need to see it on Ethereum Classic. But basically, what is happening right now is we're seeing this separation occur in the markets, in the cycles. So markets, that was probably not the best way to do it. Here's Ethereum Classic in the bottom, AMC on top. So the two have had a correlation of tracking each other. If you guys don't know how this works, I recommend you go watch the Crypto Runs AMC Follows video I posted back in 2022. That goes over this a lot more in depth. But basically, the cycles right now are straying away a little bit from each other. They're not tracking one-to-one, and we knew this was going to happen. These cycles basically tracked about a month apart here in the beginning before AMC ran in 2021, and then it started to narrow down to the point where they were tracking every single day. And this happened with the overall markets as well. Everything was tracking pretty much one-to-one. And then they start to separate again, right? So you have a separation phase. Things start tracking, 6 days apart, then 10, then a month, until you get to the point where that major volatility kicks in and runs and starts this whole market squeeze. So that's what we're looking for here. But there's no clear correlation just yet. That's why we are waiting right now for things to kind of pan out on both sides, on Ethereum and on AMC. So until that happens, it's like each man. All right, 40 minutes left, guys. All right. What else is going on here in the markets? A couple things to go over here before. Let's go over SPY for those that are curious on what we're looking at, tracking here for SPY. But SPY right now, here's the changes indicator. All right, so a couple things here, and this was pretty crazy actually. I went on the weekly chart. I was messing with this. At the parameters set, actually the parameters I had, I was tracking 200, and I was on the daily. Okay. This is a good way to spot cycles. Go back and sort of see where you are currently in the cycle. So markets turning around, right? We're in a bullish market right now, and basically gave up all of the losses that we had back in 2021, right? This, what the markets were doing, right? They were like, yo, we're gonna have a crash, like markets are gonna crash. And you know, the reality is that media will basically tell you the opposite of what happens, right? Or at least it's projecting what had already panned out. They were like saying and all this stuff like right here when the markets were getting ready to turn around and pump. Things are just, they don't line up that way. But we are at a pretty critical level right now. I think we talked about a short-term breather going into that 440 range before we start climbing back up. And this is where you're going to get some stocks, some like the bigger blue chip stocks dumping a little bit, in my opinion. I think Nvidia, if Nvidia does not climb up in the next few days, I think it's going to start dumping. And I think it's going to start dumping pretty hard. Nvidia is extremely overbought right now. Like, dude. VDA. Look at this little pattern I found on Nvidia. This little guy right here had already played out with another stock. And I do like this. I like this a lot, actually. Now, this is the thing. Patterns do play out inverse. And I'm going to say this again because with SPY, specifically, we were tracking one pattern for almost 5 months. This guy right here. Now, this guy, and this is the crazy part, guys. This started tracking inverse right here. You can see it followed all the way through until this point. And then we were like, all right, well, what's going on? Like, is it just done tracking? No, dude, it tracked freaking inverse. Look at that. Right here, it starts tracking inverse, and you have the same thing, the same levels and everything is just flipped around. So this is what I'm saying, man. The algorithms will flip these patterns that track for quite some time. At some point, if the markets are getting ready to flip that algorithm and they decide that they no longer want to track, you're gonna have the opposite happen a lot of the time. So that's what we had here, man. It's the reason why with AMC as well, we have a lot of these patterns that we track sometimes, and then when they give up and stop tracking, they basically do the complete opposite. It's crazy how these algorithms work sometimes. It's mind-blowing, man. All right, 15 minutes left. Let's pull up the webcast. I have it pulled up right here. Alrighty, guys. Before the webcast, too, if you guys want to check out the indicators pack I have right now, it comes with all-in-one. Kind of go over each one real quick, but these are pretty cool. So the all-in-one indicator we're tracking right now for, we'll do stocks. So this one here covers, and you can upload as many as you like, but it will take basically spark lines of these in percentage form, so that you can clearly see them. And they're pretty much they neutralize in price. It's kind of like using log for a percentage, and then it tells you which ones are at point of breaking out. So it's a really good way to see the markets in one. That's why it's called all-in-one. Kind of tells you like, hey man, you know, this stock right here, it's getting ready to break out. It looks a little bit different than this one. The one that I made is in a different, it's on my scripts. But you get this one, you also get good old spots, man. Can't go wrong with spots. Right? Little awesome indicator. Spots breakouts. Okay, we also get copy pat. Good old copy pat. This little projection tool gives you a better perspective of the markets, projection-wise. And then you also get Volt, and Volt is a one I use for crypto specifically, because it's really good at telling you the volatility zones in the markets. If you guys want to access all that good stuff, click the link below. And also the Discord is available as well for anybody who is interested. All right, and we also have a new thing. Okay, it's called a POI schedule. So every month, I release a POI schedule of all the stocks that have points of interest, like AMC, but separate to the market, and then we follow up and update those. I started doing that this August. It's the first time doing it, and right now we have about 12 different stocks inside that POI schedule. You get a little calendar on the website. And you can get that with the Discord as well, guys. So one of the main ones we were tracking this week was Moderna, mRNA, here on Monday. Again, I'll pull this up and show you guys why this was a POI we were tracking, because we are in a spring setup, tracking this for almost a year. You see the price gravitates back down, and it's getting ready to reverse back up. Little example of how these work. But now let's get back to Amy, because I think we got this call coming back in here in the next few minutes. Oh, here we go. There's the lobby music. Hope that didn't blow anybody's ears up. All right, 10 minutes left, guys. earnings call. No, let me see if I can pull it up here so you guys can see. Here we go. Put that guy right here. Let me know if it's too high, too low, like you guys want me to fix the volume. Let me know. Oh, you know what, dude? I forgot to pull up the chat here. Oh. All right, good deal, good deal. It's weird, man. We do have some volume here, but yeah, just kind of barcoding right now. We'll see what happens here in the next 10 minutes. You guys already know I turn my mic off, let Adam and the squad go over AMC. I'll be taking some notes. I'll have a little notepad here just for you guys can kind of see everything. I mean, the lobby music is definitely better than it was last time. I think we had like symphonies last time. Space lobby music, man. Space. I'd say maybe, yeah, like a lounge. Yeah, lounge. 4 minutes left, guys. There's a little countdown. We usually have a little countdown or something. Bro, does this go with my projection? Hold up. Whoa. This literally matches the projection that I have here. What the hell? And this projection is made using AMC. So that is crazy. This is Tilray. Wow. Okay. Yeah, we got the same sort of setup here. It climbs back up, trades sideways, and then keeps going up. But see, this one has the POIs that month that is shifted. See, this goes up in September, and then that lingering effect goes into October. The levels are also similar in that, well, this projection obviously has that wick, right, that climbs up quickly and then gets shut down or whatever. But overall, like, I like this projection as well. And this one is, look at that, shut down, rides. Yeah, dude. All right, guys, I'm shutting up.
Good afternoon, ladies and gentlemen, and welcome to the AMC Entertainment Second Quarter 2023 Earnings Conference Call. At this time, all lines are in listen-only mode, and following the presentation, we will conduct a question-and-answer session. If at any time during this call you require immediate assistance, please press star 0 for the operator. This call is being recorded on Tuesday, August 8th, 2023. I would now like to turn the conference call over to Mr. John Merriweather. Please go ahead.
Thank you, Kelsey. Good afternoon. I'd like to welcome everyone to AMC's second quarter 2023 earnings webcast. With me this afternoon is Adam Aron, our Chairman and CEO, and Sean Goodman, our Chief Financial Officer. Before I turn the webcast over to Adam, let me remind everyone that some of the comments made by management during this webcast may contain forward-looking statements that are based on management's current expectations. Numerous risks, uncertainties, and other factors may cause actual results to differ materially from those that might be expressed today. Many of these risks and uncertainties are discussed in our most recent public filings, including our most recently filed 10-K and 10-Q. Several of the factors that will determine the company's future results are beyond the ability of the company to control or predict. In light of the uncertainties inherent in any forward-looking statements, listeners are cautioned against relying on these statements. The company undertakes no obligation to revise or update any forward-looking statements, whether as a result of new information or future events. On this webcast, we may reference non-GAAP financial measures, such as adjusted EBITDA, constant currency, free cash flow, operating cash generated, among others. For a full reconciliation of our non-GAAP measures to GAAP results, please see our earnings release posted in the Investor Relations section of our website earlier this morning. After our prepared remarks, there will be a question and answer session. This afternoon's webcast is being recorded and a replay will be available in the Investor Relations section of our website at amctheaters.com later today. With that, I'll turn the call over to Adam.
Thank you, John. Good afternoon, everyone, and thank you for joining us today. When I think of our second quarter 2023 results and our start to the third quarter, I want to share this with all of you. In plain English, AMC blew it out of the water in the second quarter of 2023, and I might add that the third quarter of 2023 is starting out to be roaring hot too. Around here, the metaphors we often use to describe our circumstances involve famous movie quotes. Our recent results in Q2 and so far in Q3 of 2023 bring to my mind Bruce Willis as Lieutenant John McClane in the Die Hard movies when he would say, "Yippee-ki-yay." He would then add a colorful expletive that I cannot repeat on this call. I think the closest I can get to it would be, "Yippee-ki-yay, mother ducker." So yeah, that's the second quarter of 2023. Without being too dramatic, the stakes are high, and we're surrounded by some uncertainties and risk, but it's certainly encouraging for us all to take a moment this afternoon and celebrate our immensely positive results in the most recently completed quarter. AMC's results in Q2 2023 were well ahead of last year's second quarter and well ahead of the market's expectations. Indeed, AMC exceeded consensus market expectations across the board, generating post-pandemic records for revenue, adjusted EBITDA, net income, and earnings per share. We now have posted 3 consecutive quarters of positive adjusted EBITDA, and this quarter, for the first time since Q2 of 2019, that's 4 years ago, we generated positive earnings per share, yet another milestone in our path towards ongoing recovery. While we still have much work ahead of us on this front, AMC's glide path to eventual recovery continued with significant pace in the second quarter of 2023 as our results set new records and represent AMC's strongest second quarter in 4 full years. Following an impressive start to the year in the first quarter of 2023, the second quarter yet again showed great progress. AMC saw more than a 12% growth in attendance, more than a 15% growth in total revenue, and a 71% increase in adjusted EBITDA compared to the second quarter of 2022 last year. Indeed, adjusted EBITDA in the second quarter of 2023 was $182.5 million, the highest such quarterly figure for AMC since the fourth quarter of 2019. Our ongoing progress is obvious and ever so encouraging. Combining AMC's commitment to innovation with a notable increase in both the number and the quality of movie titles from our studio partners, movie theaters are once again captivating audiences and driving an audience and attendance back to theaters in general, and especially at AMC, we're driving audiences and attendance back to AMC theaters. Our theaters across the globe welcomed more than 66 million guests in the second quarter of 2023, up 12.2% over the prior year's Q2, and it was our highest quarterly attendance number also since the fourth quarter of 2019. Let's use the second quarter domestic industry box office as a proxy for the size and the improving health of our industry overall. Looking at domestic industry box office for the second quarter, ticket sales grew by nearly 15% compared to the same quarter last year, benefiting from 6 movies that grossed more than $100 million each. Anchored by Super Mario Brothers and franchises such as Guardians of the Galaxy, Spider-Man, Fast and Furious, Transformers, and The Little Mermaid. These titles provided compelling movie-going experiences. Year to date, through today, in 2023, 19 films crossed the $100 million mark in gross ticket revenues, compared to only 12 during the same period in 2022. That is a 58% increase. And the total number of wide-release films grossing more than $5 million also continues to rise, from 24 in Q2 of 2022 to 36 in Q2 of 2023. That's a 50% increase. One area that has far exceeded pre-pandemic norms has been AMC's per-patron revenue. AMC moviegoers are consistently seeking out the most immersive sight and sound experiences, especially important to AMC, as we offer more premium large format screens than any other exhibitor. You know what premium large format screens are: IMAX, Dolby Cinema, and our various house brands, including Prime at AMC and iSense in Europe, among others. Demonstrating how significant these premium large format screens are to AMC's success, the so-called PLFs represent only 5.3% of our total screens globally, but an astounding 19% of our second quarter ticket revenues. AMC's imaginative offerings at our concession stands and in our dine-in theaters also helped AMC to generate in the second quarter for food and beverage revenues per patron $7.36 a head. That is within 1 penny of our all-time high watermark for food and beverage spending per patron. Considering the enormous operating margins in our food and beverage business, this is contributing meaningfully to AMC's improving profitability. But to me, perhaps the most surprising second quarter statistic of them all is this one. Because of our determined and sustained pandemic-era cost reduction efforts, along with ticket pricing initiatives and soaring food and beverage revenues. Comparing Q2 2023 to Q2 of 2019, 4 years ago pre-pandemic, AMC's overall profit per patron, after the cost of goods sold, improved by an impressive 40%, 40% in the United States, and 22% internationally in constant currency. Put those together, that's a 36% total global increase in our profitability per patron in constant currency. And if the Q2 domestic industry box office wasn't enough to lift our spirits and bolster our path to recovery, the month of July, the first month in Q3, was the highest grossing month for AMC in 12 years. And it was the second highest grossing box office month ever in our 103-year history. As you know, this performance in July was driven by the resounding success of titles such as Sound of Freedom, Mission Impossible Dead Reckoning Part 1, Oppenheimer, and for all of you dressed in pink, Barbie, among other titles. In the United States, the July box office represented a 5.8% increase compared to the pre-pandemic July of 2019, and a 20% increase compared to last year's July. For AMC globally, these milestones translated into July of 2023 being the highest revenue month for our company in our entire 103-year history. The first week of August is continuing with an incredibly strong showing, with the domestic industry box office about double that of last year. This all speaks to what we at AMC have said time and time again. Studios are masterful at storytelling, and when they have great stories to tell, they are best showcased, in the words of Nicole Kidman, as dazzling images on our huge silver screens. Here at AMC, those stories are perfect and powerful, and audiences are flocking to our AMC theaters in the United States and our Odeon cinemas in Europe and our AMC cinemas in the Middle East as a result. Looking forward to the rest of 2023, we have a slew of exciting movies yet to be released this year. They're coming. And barring complications to the timing of film releases due to the uncertainties arising from the writers and actors strikes currently well underway, unfortunately, we have good reason to believe that the second half box office will continue to show real strength this year. Even so, we will not get to 2019 pre-pandemic levels for this full year, 2023, but there is a clear trajectory upwards. Our hope is that COVID-19 is but a bad ancient memory by 2024 or 2025, even though as much as some of you hate it when I say the words COVID, we are still dealing with the aftermath of that pandemic. Now, at this point, I'll pass the webcast over to our CFO, Sean Goodman, to provide more details on our financial results, after which I'll return to talk about some of our ongoing initiatives and AMC's plans for the future, as well as taking some of your questions. Sean?
Thanks, Adam. Thanks, everyone, for joining us this afternoon. So before I begin my comments on our second quarter financial performance, I would like to just take one moment to provide a little bit of context behind our earnings release and 10Q issuance this morning, rather than our customary after the market issuance. As you know, the Delaware Court is currently in the process of reviewing our proposed shareholder litigation settlement. A ruling by the court prior to the issuance of our 10-Q could constitute a post-balance sheet event that might require an adjustment to our financial statements and thereby a possible delay in our regulatory filings and earnings release. So to avoid any such risk of a delay and the possibility of thereby missing our filing deadlines, we decided to release our results for the second quarter before the market opened this morning. Okay, so now on to our results for Q2, our strongest quarter post-pandemic and a clear sign of our ongoing recovery. 2023 has continued to see box office recovery, $1.7 billion in Q1 and now $2.7 billion in Q2. For the first half of 2023, the box office is now up approximately 20% from the same period last year. And remember, the first half of 22 was up almost 4 times from the same period in 2021. With attendance growth of 12.2% and revenue growth of 15.6% compared to the second quarter of 2022, we grew our adjusted EBITDA by 71% to a post-pandemic record of $182.5 million. This illustrates the operating leverage that is inherent in our business model. For the quarter, we achieved positive earnings per share for the first time since Q2 of 2019. Now, granted, it's a small positive number, but for those of us who have been working tirelessly for AMC to recover from the depths of the pandemic, it is yet another milestone along our recovery. In the North American business, total revenue increased by 19.8% compared to Q2 of 2022. This was driven by an attendance increase of 15%, admissions revenue per patron increase of 2.2%, and food and beverage revenue per patron increase of 9.2% to a record all-time high of $8.22, surpassing the previous record that was set just last quarter, and an amount that is 47.3% above pre-pandemic Q2 2019. In the international business, on a constant currency basis, total revenue increased by approximately 1% compared to Q2 of 2022. This was driven by an attendance increase of 4.6%, admissions revenue per patron decrease of 1%, and food and beverage revenue per patron increase of 6.5%. International food and beverage revenue per patron for the quarter was 34.5% above pre-pandemic Q2 of 2019. It's worth noting in the international business that during the quarter, we saw a 27.6% decline in other revenue. This decline is associated with relatively high levels of gift card and package ticket expirations and also relatively high theater rental income, all in the prior year period, and associated with the impact of the COVID-19 pandemic on our business. As the industry box office continued on its recovery trajectory, our revenue growth in the quarter was enhanced as guests responded favorably to our targeted marketing campaigns and increasingly adopted our industry-leading app. In addition, our creative food and beverage options, such as movie-themed cocktails and unique collectible items, encourage frequent visits to the concession stands, all contributing to both revenue growth and our overall profitability of the business. Furthermore, visually stunning and action-packed films inspired audiences to experience our premium large format offerings. Premium large format revenue, including 3D, represented 30.1% of domestic admissions revenue in Q2 of 23, compared to 26.7% in the second quarter of 2022. And in our international markets, premium format revenue represented 16.3% of admissions revenue compared to 15.7% in the second quarter of 2022. Moving to the balance sheet. We ended the quarter with liquidity of $643 million, comprised of $435 million of cash and cash equivalents and $208 million of undrawn credit facilities. Operating cash generated, this is a non-GAAP measure representing cash from operating activities after deducting capital expenditures and before both debt servicing costs and deferred rent payback, was a positive number of $100 million for the quarter. This is almost double the operating cash generated in Q2 of 2022. Our top two capital allocation priorities remain: one, liquidity, and two, strengthening the balance sheet. During the second quarter, we continued to make progress in this regard. We raised $34.2 million of gross equity capital. We repurchased $42 million of debt at an average discount of 34%, and we repaid $27.1 million of deferred rent. The deferred rent balance at the end of the second quarter was $96.5 million, and we plan to reduce this balance by another approximately $40 million by the end of this year. So this year to date, we've raised $189 million of gross equity capital. We've lowered the principal value of our debt by $245 million through debt repurchases or exchanges of debt for equity, and we have repaid $61 million of deferred rent. Adding that all up, we've reduced our liabilities by $306 million thus far in 2023, and a total of $689 million since the beginning of 2022. In addition, we began the third quarter of 2023 with a purchase of yet another $24 million of debt during the month of July at a discount of approximately 28%. CapEx for the quarter, net of landlord contributions, was $46.6 million, and we expect net CapEx in 2023 to be in the range of $150 to $200 million. During the second quarter, we also continued to actively manage our theater portfolio. We added 2 new theaters and we closed 16 theaters. So this brings the total number of locations closed since the pandemic began to 152 locations, and the total new locations opened to 57, for a net reduction of 95 locations. And note that the combined 57 new locations continue to outperform the 152 closed locations prior to their closings. The pandemic almost crippled our business. Since then, we have made enormous progress in enhancing the moviegoing experience at AMC. This has resulted in very meaningful improvements to our per-patron profitability metrics. At the same time, we've also maintained strict cost and capital expenditure discipline. And because of our actions and a rapidly recovering industry box office, our revenue and our adjusted EBITDA have shown strong growth. And we have also been very active in the capital markets. We've taken opportunities to strengthen our balance sheet and to prepare AMC for a bright future. With the post-pandemic record-breaking second quarter behind us, our recovery to date is clear. However, we're not yet ready to declare victory. The box office remains around 16% below pre-pandemic levels, and there's some downside risk with the ongoing screenwriters and actors strikes. And with our fixed cost structure and relatively high debt servicing costs, these are exacerbated by interest rate increases over the last 17 months, we continue to burn cash on the bottom line. Based on what we know today, we're optimistic about the remainder of the year, and we believe that the 2023 box office could exceed 2022 by more than 20%. However, if the strikes are prolonged, or if our ability to access the capital markets is constrained, then our ongoing recovery glide path and our ability to continue to take the necessary actions to strengthen our balance sheet and to ensure a full and sustained recovery may be in jeopardy. And now I'll hand the webcast back over to Adam.
Thank you, Sean. I'd like to give you all a brief update on 7 specific items related to some of our thinking as well as our exciting ongoing initiatives and our current plans. First, on liquidity. We've made many public statements throughout this year and again in recent weeks that AMC has skillfully charted our way through turbulent waters at a time when several of our most important competitors failed, and that we watch our liquidity position very closely. We've made it clear that our strategy first is to survive and then to thrive. Of course, we are heartened by the fact that we had $643 million of liquidity at the end of the second quarter of 2023. But some who follow us closely nonetheless underestimate the potential for cash burn in the seasonally weaker winter months. This is especially true given the uncertainties of the writers' and actors' strike, since no one knows when they will end. We intend to make sure that AMC does not run out of cash by continuing to seek the flexibility to raise fresh capital on the best possible terms. Our highest obligation to stakeholders is to avoid the pitfalls that sank others in our industry into financial ruin. Second, on balance sheet management. In the second quarter, we methodically raised $34 million of equity and retired $42 million of debt. Sean, in his remarks, gave a lot of other statistics, various time frames of how much equity we raised and how much debt we retired. I am particularly intrigued by this statistic, which you haven't heard yet on the call. Since the creation of the APE preferred equity units in August of 2022, about a year ago, AMC raised $418 million of equity and retired $548 million of debt, including deferred rent. Needless to say, this is very helpful as we contemplate our current liquidity profile. Third, on so-called PLF screens, premium large format screens. As I mentioned earlier, a PLF screen grosses about 4 times a regular non-PLF screen. So it's kind of obvious that we're happy that we have more PLF screens than any other movie theater company in the world. And assuming that we have sufficient cash reserves to invest in growth initiatives in a big way, which at the moment we do not, but we could, looking a little further forward, assuming we have sufficient cash reserves to invest in growth initiatives, we would intend to add a significant number of additional premium large format auditoriums to our system. Fourth, on innovative theater programming. Over the past 2 years, we have experimented with sports programming and have featured great musical artists on our big screens. We will continue to look for opportunities to expand those innovative efforts. Fifth, on popcorn. Our new lines of ready-to-eat and microwave popcorn for the home are literally flying off the shelves at Walmart stores throughout the United States and on Walmart.com. They were launched in March and April of 2023, and we would describe sales as being brisk and pleasantly ahead of our expectations. So much so that we are now looking seriously to expand into other grocery chains and other retail outlets. Once we get to a full national rollout in multiple channels, which could take a while to be fair, but based on the early results so far, I would not at all be surprised if this turns out to ramp up, perhaps becoming up to $100 million per annum revenue source for AMC Entertainment. Next, on premium gourmet candy. Our popcorn line has been so successful that we are now confident that we should keep going in the area of food. So much so that I expect that later this year or early next, AMC will definitely introduce a private label line of various AMC Theaters branded premium gourmet chocolate candies and gummies. I'm eating some samples right now as we speak on this call. The taste and the packaging are wonderful in my opinion. And speaking of the taste, these chocolate-covered pretzels are like to die for good. Like, John, like move them away. I can't, no more. Calories, calories, calories. We believe we will be successful with the candy lines as we've been successful with the popcorn line. It goes without saying, of course, that we will still sell Hershey's and Nestle products in our theaters. But just as a year or so back, we asked the late Orville Redenbacher to make some room on shelves for our popcorn, so too, we will ask the long-gone Milton Snavely Hershey and the long-gone Heinrich Henri Nestle for their understanding that premium AMC candies coming to AMC theaters are now in the works as well. And the last item on merchandise. Early in the period where retail shareholders took control of AMC, which basically started in earnest in January 2021. Through suggestions that came in on Twitter and other channels, retail investors directed our attention to the possible profits that can come from the sale of movie-themed merchandise and AMC-branded merchandise. We've had meaningful successes in this area, especially with our collectible popcorn vessels, sold almost weekly in quantities of between 25,000 and 100,000 units almost each weekend at prices that have ranged from about $20 to about $65 each. We plan to significantly expand our merchandise efforts in 2024 and beyond, with a greater variety of items and a larger available quantity of items for sale. It is not uncommon today for us to sell out of some of our movie-themed merchandise in the opening weekend of a movie's release. Movies run a lot longer than the first 72 hours, and I think our merchandise business would expand if we have greater supply to sell. In closing these remarks, I'd like to address directly the millions of our AMC shareholders, so many of whom pay attention to what I say on Twitter and to these earnings calls. In a tweet yesterday, I expressed my sincerest possible gratitude for all of your support. If you read my Twitter feed, though, as I do, you'll see there's a lot of light, but also a lot of heat directed my way. That's okay, I have broad shoulders, and the variety of views comes with the territory when there are so many voices and so many opinions. As I read these inbound comments, I see that some who care about our company deeply still don't get the nuance of our current circumstances, or wish that I would just cheerlead only the good news. But that's not what CEOs are supposed to do. The success we have seen this year in our theaters, especially including Q2 and Q3 results so far, is what makes us optimistic that we are on the right road, and that by 2024 or 2025, we will look back on the decade of the 2020s with amazement and pride as to how well at AMC we dealt with the most challenging hands of cards ever directed our company's way in the century plus of its long existence. But despite that medium-term confidence, in the short term, and some of you don't like to hear this, but in the short term, AMC has some serious liquidity issues to solve. We should not oversimplify that it will be easy to overcome the obstacles and hurdles in our path. However, this AMC management team has proven over the past few years that AMC is highly able in liquidity management. So I have every confidence that we will continue to execute well to do what is needed. To the extent humanly possible, I am determined that at AMC, we will rise to every and to any challenge. Thank you for listening. Sean, let's now move to questions, both from shareholders and from industry analysts on the call.
Thanks, Adam. So quite a few questions from shareholders here. First question relates to our strategic direction, and the question is, what are the top priorities for AMC both today and in the future? Are we considering M&A opportunities?
You know, so some of you have asked me on Twitter, like, why are we still talking about COVID? And that's because in the movie theater industry, the industry-wide box office, which is the basic size of our industry, is still below 2019 levels. And that's a lingering problem because if you look at the box office, 2017, 2018, 2019, this industry was sized for about an $11.5 billion box office. And in 2020, it was $2 billion. 2021, it was $4.5 billion. 2022 is $7.5 billion. This year, I hope it hits $9.5 billion. Might hit more, might hit less. We won't really know till the end of the year. It's going to be a lot more than 2022. But we're still down below pre-pandemic norms. And I remember when we shut our theaters in March of 2020, and people were predicting we'd be back to normal at 4 to 6 weeks. Our theaters were shut for 5.5 months. Some of our theaters were shut for almost a year. And the box office fell by more than 80% that year. And it still was, way below pre-pandemic levels, even now, 3 full years later. So we've had to adjust our strategy because the movie theater industry has come back slowly. And so our strategy has become survive, then thrive. We have had to take the steps to make sure this company survives. And not all companies in our industry can say that. Other companies with big brand names, both big chains that you would recognize and small chains that had a cult following in some markets in Texas and California, they went bankrupt. And a lot of their theaters didn't reopen. So first we have to survive. And as I said, we like the results in April, May, June, July, and August of this year are fabulous. So I think we're going to start to move from the survive phase to the thrive phase. To make sure we get there, and you've been hearing me say this as a broken record for 2 years now, but especially in the last year, we must be able to raise capital if we need to. Because the dumbest thing we could ever do as a company is run out of cash. And other companies in this industry have run out of cash. And some of the armchair quarterbacks on Twitter who give me advice every day, if I'd followed their suggestions, we would have run out of cash a long time ago. Or if I follow their suggestions now, we'll run out of cash soon. So the most important thing as part of the strategic direction of this company is make sure that we have ample cash reserves to outlast the aftermath of the pandemic. Because I've already said, you know, in 2024, 2025, it's going to look pretty bright. But if we were to run out of cash before we get to 2024 or 2025, that would be a disaster. And that's a disaster that I simply will do everything in my power to make sure that this company avoids. So when we talk about strategic direction, I think that we've got to make sure that we put this company in a position to be able to raise capital. That's what the shareholder vote on March 14 was all about. Next, as we have sufficient cash to survive to the glory days of 2024 or 2025, there are a lot of things that we can do with that cash. Because right now, Sean said we've taken our CapEx spending down to $150 to $200 million a year. 3 or 4 years ago, we were investing $500 million of CapEx a year in our business. Right now, it's prudent to husband cash, to save cash, so that we don't run dry. But there will be a time that we have much more cash reserves than we have currently, either because we will generate it from operations or because we'll raise it. And then the question is, what do you do with that cash? And here's my list. First, we need to spend some money to affect what I'll call deferred maintenance on some of our theaters. We pulled our CapEx spending way down during the COVID impacted years. And we've seen examples of leaking roofs and breaking air conditioners and boilers that provide heat in the winter that are towards the end of their life cycle and they're just breaking. They need to be repaired. We have thousands of our screens where the movie projectors are getting towards the end of their useful life. And we are going to need to invest capital to replace those projectors. The good news of that, however, is we've already made the decision that when we replace these projectors, we're putting in laser projectors, and laser lighting is it's a much brighter, sharper picture on the screen, and it's quite an environmentally friendly initiative too. Next, there are growth initiatives within our theaters. I've already mentioned on this call premium large format screens. In the state of New York, until just recently, like in the past 12 months, it was illegal for most movie theaters, to sell alcohol. The New York legislature recently changed that law. But that means that we have a whole bunch of theaters where we probably should build full alcoholic bars into our theaters. One of the things I'm interested in is putting more variety of food items into our concession stands, which might, because our food and beverage sales are at a record high, that might require, putting in $10,000 to $20,000 of equipment in a concession stand. Now, $20,000 doesn't sound like much, until you realize we got to put it in 575 theaters. All of a sudden, it's $10 million. Next, we've had some circumstances where we've been able to add theaters to our network, and we were able to bring them into our system very inexpensively. When I say very inexpensively, I'm saying we've been all in. Purchase price, transition costs. We've been able to bring some theaters into our system at 3 to 4 times expected EBITDA. That is such a bargain. We ought to do that all day long if we can find opportunities to bring good theaters into our network inexpensively. There's M&A opportunity. And there's 2 kinds of M&A opportunity, right? There's just buy some movie theater chains if we can do so, and I want to emphasize this, if we can do so at a bargain basement price. I have no desire to pay up to bring movie theater chains into our network. But if we can get them at a cheap price, that's value creation for our shareholders. And if we don't raise a lot of cash, maybe we can do some transformative M&A as well, where we can look to expand to being something more than just a pure movie theater play. So that's sort of the strategic roadmap of where we might invest our monies if we have more money than we have today.
Yeah, thanks, Adam. I think that addresses that question very nicely. There's some questions here about our theater footprint. So, what are the expansion opportunities of that footprint, both U.S. and internationally? And what are the opportunities to continue to close theaters, underperforming theaters, and improve our overall our profitability? And also, how does premium large format fit into those plans?
So on the theater footprint, we've managed this like maniacally over the last 3.5 years. You gave the stats in earlier that we opened 50-something theaters, we closed 150-something theaters. We didn't open any of the 50 lightly, we didn't close any of the 150 lightly. When you look at a company that has almost 1,000 theaters globally, we got some theaters that are brand new, we got some theaters that are 25 years old. We got some buildings in great shape, we got some buildings sort of at the end of their useful lives. We've got theaters where we've got great rent deals with landlords, and we've got theaters where we have terrible rent deals with landlords. We've got some theaters in unbelievably successful malls, and other theaters in unbelievably unsuccessful malls. And so we have a whole department here, our real estate department, our development department, that's paying attention to every single one of these theaters, every single one of our landlord relationships, and where the theaters are successful, we cheerfully pay the rents. Where the theaters are not successful, we enter into cooperative dialogue with the theater landlord to see if they're willing to lower our rent, to keep us around, to continue to drive traffic to their other properties nearby. And in many cases, we're quite successful in getting landlords to adjust rents. In addition to that, I would say we have spectacular relationships with all of the large mall operators in the United States. The Simons, the Brookfields, the Westfields, and a whole slew of other theater owners. And I could name another probably 10 REITs who have, anywhere from 5 to 50 of our theaters. I think we maintain excellent relationships with each. One of the things, because our relationships are so good, as they build new malls, they often want us to come along for the ride. Westfield just opened up a beautiful new mall in Topanga, to the northwest part of Los Angeles. And that theater that we opened there is already one of the 20 most profitable theaters we have in the United States. It opened in the past year. A year and a half back, actually I think it's 2 years back now, we brought in the Grove, an Americana brand in LA and in Glendale, in Southern California, at Rick Caruso's retail establishments. The Grove is now the third most profitable theater in the entire United States for AMC. So that's an example of a theater that we brought into the network just in the past 2 years. And we continue to talk to landlords all over the place that we're ready, willing, and able to bring theaters into our system if we can do so on good economic terms. And as an example of that, literally just in the last 2 weeks, we brought a theater into our system in Reading, Pennsylvania. It's not exactly as big a market as downtown Los Angeles. But that's a theater where the seats were already reclined, and that theater enjoyed a 65% market share of its surrounding communities, and we got a very attractive price that brought that theater into our system quite reasonably. So we are continuing to look at pruning our system downwards, where we have underperforming theaters and can't renegotiate rents. We're looking to keep our theater network the same size it is today by renegotiating rents. And we're looking to grow our theater network as our theater landlords want to take us where they go. And then, of course, I mentioned there's always M&A opportunity as well, but there's nothing immediately on the horizon to report on that front.
Thanks, Adam. Let's talk a little bit about food and beverage. There are quite a few questions about that because it's been enormously successful for us post-pandemic. Question here about plans to potentially expand the menu offering at theaters, or plans to open restaurants at a theater, or take food orders directly from the seats.
So, look, this is this is subject near and dear to my heart. I'm an eater. If any of you have seen me sideways, you know, I'm not the slimmest guy around, although I weigh a lot less than I did 20 years ago. And no more chocolate-covered pretzels. Or the chocolate-covered almonds are pretty good. Anyway, I think AMC was leading the way before the pandemic in having the biggest variety at our concession stands. Remember, we introduced something called feature fare all across the system here in the United States, where we made a lot of progress and variety. We put in as a brand standard for all AMC theaters in the United States, Coke Freestyle machines. I counted more than 140 flavors come out of those Coke Freestyle machines. I think that's an enormous advantage for us over theater chains, which still are offering 8, 12, or 14 flavor choices. Those Coke Freestyle machines don't come cheap, but I think that was a very smart investment for us. But then COVID hit, and when we came out of COVID, we came back with a very limited menu, which we tried to grow back to sort of the feature fare levels. But then came supply chain shortages, and then came labor shortages. And all of a sudden, some of our more complicated items were difficult for our staff at the concession stands to execute, which then would slow down delivery, which would lengthen lines at the concession stand. And you're always trying to balance variety of items against speed of purchase in a concession stand, because no one wants to wait in a long line. I don't blame them for that. And I'd say where we are today is we're back up to about 80% of the feature fare variety at the height of where we were in 2018. And in talking with our food and beverage department, they'd like to see our variety of items expand up to feature fare levels, within 12 months of today. But, that was just talking about variety of menu items. But when you look at the success of our food and beverage effort, remember, let's use United States numbers. Pre-pandemic in 2019, we were doing $5 a head in per patron food and beverage spending. In the United States, we're doing over $8 of food and beverage spending today per head. That is a staggering increase when you realize that if you take out only cost of goods sold, so this isn't the labor at the concession stand and not the capital cost, the equipment and stuff, but just like the cost of the syrup and the cost of the corn and the cost of the hot dogs and the rolls and the nachos and all this stuff, the candy that we sell. Like, we have more than an 80% margin in our food and beverage business. And for our food and beverage business to be up as much as it is, 736 was the number globally in the second quarter. This is a staggering success for us. So I really want to compliment our F&B department, led by a guy named Hank Green. We're just hitting that out of the park in F&B spending. And that's what's driving such a big increase in per patron profitability for AMC. Remember the stat I gave, our per patron profitability, this isn't just food and beverage, this is total per patron profitability. It's a combination of expense reductions, ticket price initiatives, food and beverage success. Our profit per patron is up 40% in the United States. It's up 22% internationally. These are stunning numbers.
Adam, our shareholders appear to be uniformly very excited about the retail popcorn sales and our initiatives there. And so there are questions about, do we plan to expand this further? And are there other potential revenue streams similar to retail popcorn that can help grow the business?
So, yeah, I couldn't be more excited about the popcorn success. We spent over a year in our food and beverage department working on the right recipe for home corn, because whether it was in the bag ready to eat or microwave pouches that you microwave at home, we wanted it to taste just like it tastes in the movie theater. And by the way, there's a secret to our popcorn. Not all popcorn is created equal. There are different grades of corn, and we buy the best there is. So one of the reasons why our popcorn is so good at AMC theaters is we buy the best corn. It's like graded. And so our corn that's at home tastes great, and the sales, like Walmart can barely keep it on the shelves, and they keep on reordering and they keep on selling out. So yes, we gave Walmart a 6-month exclusive because they gave us so many store locations. We rolled out the AMC popcorn in like 2,600 Walmart stores. Very few brands get to roll out on day one in 2,600 Walmarts. Normally you'd get a fraction of that, and you prove your way. But they believed in our brand, and it's been a big success, and we're happy to give them the full exclusive. But yeah, as soon as the exclusive is up, we will have conversations with all the major grocery chains, with all the major retail outlets in the country. I'd like to see, it'll take a while, but I'd like to see AMC popcorn on every shelf where you can buy snack products. There are other things too. I've already talked about the candy products. That's next. And there are a whole host of other ideas that we have to grow revenues for the company. But in the interest of time, I'll either save those for another earnings call or for Twitter.
Final question here about the trading of our shares. And there's a few questions here related to, can you comment, Adam, on the very high level of failures to deliver in AMC securities?
Yeah, I can, sort of. I mean, there's a limit to what I'm supposed to say on this subject. But I can say some things. I know it's maddening to so many of our shareholders. I read my Twitter feed, guys. I know what you think. I know what you say, because I get thousands of messages a day. And since, for those of you who didn't send Elon Musk his $8 a month for a blue check mark, since you're limited to a couple hundred characters, you can read a tweet pretty fast. I know you're really frustrated by the high number of FTDs. And as many of you, not all of you know, but as many of you know, an FTD is a failure to deliver a share within the normal trading closing cycle, which is within two business days of the trade. And so, if someone never delivers a share, they're breaking the law. But if they deliver the share 3 days late, one day late, which is on the third day, they show up as an FTD in your eyes, but the trade did consummate. A little slow, but it consummated. If more than 0.5% of our trading volume is in an FTD status, then we go on something called the threshold list. And we've been on and off the threshold list many times in 2023, and for that matter, in 2022 as well. And this drives some of you out of your minds, because I read what you say, and I say out of your minds in a nice way. I don't mean it in a nasty way, but you're angry about it because you think there's something wrong going on. And again, I've got to be very careful what I say legally, but I can tell you this. On multiple occasions, even multiple occasions this year, we have gone to the New York Stock Exchange at very high levels to make them aware of our status on the threshold list. And similarly, we've gone to FINRA, which is the regulatory body of the public markets, and we are voicing your concerns. And unfortunately, I know many of you would like to see the results of what they send us back. It's not so easy for us to share that information with you. But we're aware of the concerns, we're aware of them ourselves, and we are taking them to the appropriate regulatory bodies.
Kelsey, that's going to do it for the prepared for the prepared questions from the internet. Can you give the instructions for Q&A, please?
Thank you. Ladies and gentlemen, we'll now begin the question and answer session. Should you have a question, please press the star key followed by the 1 on your touch-tone phone. You will hear a 3-tone prompt acknowledging your request, and your questions will be polled in the order that they are received. Should you wish to decline from the polling process, please press the star followed by the 2. And if you are using a speakerphone, please lift the handset before pressing any keys. One moment, please, for your first question. At this time, there are no questions. You may proceed, Mr. Merriweather.
We are after 5 o'clock, which is supposedly our cutoff. So I'm going to thank everybody for joining us today and leave you with a couple of thoughts. One, we had a fabulous quarter in the second quarter of 2023, and July was gangbusters, and August is gangbusters so far. And for those of you around the country who are listening in the United States, it's really hot in the United States right now. Most of our theaters are quite cool, and they have some really good movies on the screen. So if you haven't gone to see Sound of Freedom, or Mission Impossible Dead Reckoning Part 1, or Oppenheimer, or Barbie, or Haunted Mansion, or all the other wonderful movies that are out, go to an AMC theater near you. We'd love to see you in our theaters. Thank you for joining us today.
Ladies and gentlemen, this concludes your conference call for today. We thank you very much for participating and ask that you please disconnect your lines. Have a great day.
Okay. All right. Interesting call, man. Okay. All right, so couple of things, man. Didn't get much clarity on or clarification on the APE RS conversion or anything like that. So that sucked a little bit. But again, with these calls, as we've seen time and time again, guys, this is in the first earnings call where we don't get a lot of clarification. Again, it's not about speculating what's going on behind the doors or why this is happening. Ultimately, it comes down to the chart. Okay, like that is how I treat it. Again, if this is so, like, we're always gonna want that clarification. We're always gonna want that, but you got to think about it in terms of like how market structure works sometimes. Like, he's not gonna be able to say all these things that could potentially trigger something. Like he said, legal terms and stuff, that could potentially be something that he has to hold and refrain himself from previous times where maybe he's done that. So things have to be released according to these market terms sometimes, okay? So like that, I'm sure that has to do something with it. But again, it's not about speculating. What we know right now so far is that, well, things are pretty much sideways. Nothing really affected the price of AMC. It was just pretty neutral. And just to close things off here, guys, the projection still holds. I mean, there's still nothing that is showing us coming down from this, which is good news. So as long as the macro chart is still pointing up, that is good for AMC, in my opinion. Okay, I don't think that this earnings call really is really going to make or break the price. Again, it's just pretty neutral, pretty basic stuff. He did touch up on the FTD thing, but again, all he said was that they've been going to FINRA and bringing up the issue and stuff. But then again, that is pretty separate from this whole thing, because there's only so much they can do as well with that. Even bringing it up, you then go into this whole market manipulation thing, and then that's pretty separate from the whole space. Just like retail traders, right? Bringing this stuff up, sometimes it gets ignored. It's just the way the markets work. It's the cycles, man. It's the algorithm, the freaking ugly algorithm, all right? So we'll leave it there today, man. Crazy stuff, but yeah, man, we'll get through it. See how the charts end up turning out here in the next few days. And yeah, man, good to have you guys here on the stream. Make sure you guys subscribe, all right? Hit that little notification bell for next time we go live. All right, you guys take care. Bye-bye.